So how has this S&P 500 fund from iShares performed more than double compared to the Vanguard version? As you can see, over the past year, its performance is nearly up by 17%. However, the Vanguard version of the S&P 500 is up by only 8.25%, and they both track the exact same thing, which is the S&P 500. Now, the answer is that this version of the S&P 500 uses currency hedging. Now, the difference between the two, the performance, is because there was a difference between the pound and the dollar. Remember, the S&P 500 are American companies, all based on the US dollar. We here in the UK buy in pounds, Great British pounds. So somewhere along the line, or multiple different times, there is a change in currencies. And because of this fluctuation, over the past year, this performance has been greater with the hedged version. Now, currency hedging is not a simple thing to actually explain, but it basically uses complicated financial contracts to hold a currency exchange rate so that the fluctuations aren't too crazy. Now, currency hedging is not perfect. It costs more, so the fund actually will charge a slight bit more. And also, over the long term, the currency fluctuation between the pound and the dollar, let's say over 40 years, might stabilize. Sometimes it might be better, sometimes it might be worse to be hedged, but over the long term, you pretty much get very similar returns. And because it uses really complex financial instruments, if the currency, fluctuates too drastically between the pound and the dollar, that could lead to a loss in performance on your portfolio. You can sign up to Trading 212 today and receive a free fractional share worth up to £100. Now, all you have to do is to go into the promo code section of the Trading 212 app and then just use my code JUBAIR.